Hello everyone, this is Arnaud Delapierre. Today, I would like to discuss a topic that might interest you, commodity trading. You are probably wondering where to start, and you are not alone. I myself fumbled at the beginning, so I know how intimidating the first step can seem. At the same time, there's this deep desire to learn something new, which can open up opportunities. And that's exactly what I want to share with you. Step by step, always staying concrete. So, let's go without stress and see how to lay good foundations from the start. You might have already heard of commodities like oil, gold, or even wheat. These products are everywhere in our daily lives, and their value often depends on economic conditions, geopolitical tensions, or even climatic phenomena. With so many parameters involved, it can sometimes be difficult to make sense of it. The goal here is the aim is to simplify things as much as possible. We will focus on practical concepts. Why are these products attractive for traders? What are the risks to be aware of? And how to progress step by step to carve out your path in our trading environment. There are several categories of raw materials, and each obviously has its specific characteristics. Precious metals like gold or silver are often reputed to be a haven in uncertain times. On the other hand, energy products such as oil and gas can often exhibit marked movements due to supply. And as you have already anticipated, the demand. Not to forget, of course, the C, agricultural products that are directly influenced by seasons and harvests. By understanding the impact of all these aspects, we manage to better target opportunities and implement more suitable strategies. The video is supported by Notrade, a free application on iOS and Android. If you are looking for a tool to receive precise trading signals, and manage your operations live, it is a good deal. The interface is intuitive, and the community is quite responsive for exchanging tips. Try it, you could save valuable time in your trading routine. And to tell you the truth, I use it myself to stay focused on the essentials while keeping an eye on promising leads. Now, let's get back to our commodities. To start, you should know that each category can react differently to economic news or to international events. Without wanting to overwhelm you with theory, it's still useful to quickly understand why a price fluctuates. In this sector, volatility can be as intimidating as it is fascinating. The important thing is to proceed with a structured approach. Ask yourself the question, why be interested in one product over another? Is it because it is more stable, more liquid, or because its market seems simpler to follow? Prices rise. Conversely, a production surplus can drive prices down. It's a constant balancing act influenced by weather, public policies, or consumer trends. Understanding these principles saves you from certain unpleasant surprises. You will quickly notice that when a producing country announces a cut in its production, traders react immediately. Hence the importance of staying informed and not neglecting these fundamental aspects. Let's move on to a practical point. The instruments for trading these products. The most classic is the futures contract, which binds you to buy or sell a commodity at a later date at an agreed price. There are also options that offer some flexibility. You can buy the right and not the obligation to carry out the operation. These financial tools each have their advantages and disadvantages. Before you start, take the time to understand how they work and their risks. There is no magic recipe, but rather choices that align with your trading style. Risk management is a fundamental aspect when tackling commodity trading. Before anything else, Determine how much you are willing to lose on a single trade. Then, use stop orders to limit the damage in case of a sudden reversal. Do not try to bet everything, because even commodities that seem stable at first glance can experience significant fluctuations. Another idea, set clear profit goals for yourself and do not get carried away. If the market turns green, always keep in mind that a solid plan is built step by step. The news plays a big role in this sector. Official reports on oil stocks, weather bulletins for crops, or even OPEC decisions can trigger major movements. And keep an eye on economic publications and major political events that can impact supply and demand. Everyone at their own pace, but what's important is to stay in tune with the information flows that matter for your product category. Then, by cross-referencing this information with technical data, such as support and resistance levels, one refines their judgment. Next, you need to determine if you prefer a short-term approach or long-term. Some like quick back-and-forth moves, taking advantage of intraday variations, while others choose a more steady approach, betting on underlying trends that can last several months. In the first case, the freedom to move quickly can be exhilarating, but it requires being very responsive. In the second case, one relies more on global economic trends and sometimes needs more capital to keep positions open without stress. Everyone chooses their capital according to their profile. To refine your knowledge, I recommend browsing specialized websites, reading expert analyses, and consulting trader forums. You can also find a chat about our trades, which may be interesting. Some video or online reports can also provide interesting insights, provided you analyze them with perspective. Over time, you will develop your own benchmarks to distinguish a rare opportunity from mere temporary noise. The idea is to remain curious without getting scattered. Take the information where it can be found. Then, confront it with your own experience. Is this intersection that helps you progress and gain confidence? On my side, I started by getting interested in wheat because I already knew a bit about the history and harvest cycles. Gradually, I understood that weather uncertainties could make its price jump, sometimes within days. Once, I saw an opportunity when the weather forecasts predicted a severe drought. Demand remained stable, but potential supply became uncertain. I took a position with a tight stop loss to limit the risks. This operation brought me a decent profit, while reminding me that there are many factors that can change the situation at any moment. In terms of trading style, you can choose to be very active with intraday operations or opt for swing trading over a few days to a few weeks. Scalpers love to track micro variations, while swing traders prefer to let their position run while monitoring the most prudent entry and exit points. Neither is superior. It all depends on your availability and stress tolerance. The important thing is to clearly define your approach and stick to it to avoid making decisions based on emotions, quite simply. To move to the next step, you can start it with a demo account on your preferred platform. Try different types of commodities to see which ones you feel most comfortable with. Note your trades, analyze your mistakes and successes. The key is to build concrete experience before investing real money. Don't hesitate to adjust your strategy over time. Sometimes a small adjustment can make all the difference. And if you feel a lack of confidence, take the time to train more or discuss with other enthusiasts. We're reaching the end of this overview on commodity trading. I hope this discussion has given you concrete leads to start in this sector. With confidence, and method. If you have questions, share them in the comments. I would be happy to answer and naturally enrich the debate. If you enjoyed the content, don't forget to subscribe to the channel and leave a thumbs up. It encourages me to continue providing quality information. Thank you for watching this video and see you soon for other exciting topics. Bye-bye.